Hello and welcome to Pathbreakers. I'm Neha Bothra. My guest on the show has played a key role in closing some of the biggest deals on Wall Street. She is Aiyengar, the global head of mergers and acquisitions at JP Morgan. She joins us from New York to discuss how she broke the glass ceiling, what's driving M&A activity in current times, and a lot more. Hi Anu, thank you so much for joining us on Pathbreakers. So good to have you on the show.
I'm very happy to be here, Neha, and nice to meet you as well.
You now are a very prominent name and face on Wall Street. You've closed some of the biggest deals. I thought I'll start by asking you if you were always fond of crunching numbers, legal contracts. Was this something which you always felt was your calling as a child?
No, I don't think I knew what banking was, leave alone investment banking. I think as a child, I was much more maybe focused on not just growing up and getting married and being somebody's wife. Maybe that was the biggest driver, and actually wanting to have my own identity. But I didn't know what that was, and it took a long time for me to figure out what that was. My father worked for the government, and I would remember sometimes people telling me, oh, you should learn some of the housework and help your mother. And I would always say, no, my dad doesn't do that, so why should I do that? And so I had that in my head that I wanted to, in some ways, be like my dad. So maybe the earliest thought I had was probably taking the civil services exam and being in the government. But as I grew up, I think that changed, and it became a much more about wanting to study something that was not engineering and not medicine. I think, Neha, you understand that, right?
I do.
Because I was good in science and math, but I didn't want to be an engineer and I didn't want to be a doctor. And I don't think till I was in college and even started the job, I didn't know that this was something that I would like or that I would stay in for as long as I did.
40 years ago, I'd imagine the banking industry would have been very male dominated. It still is. How did you find your foot in? And if you can share with us some experiences, some anecdotes.
One of my motivations was wanting to be my own person. And that translated in my head as being financially independent, such that I had my own money. Because as I observed society and people around me, I thought if you were dependent on somebody else, then they get to tell you what you should and shouldn't do in life. So as with, I think, a lot of kids with middle class upbringing, education was a little bit of a path to getting to that place. And so I tried to study, but I also enjoyed school more broadly. I think I liked all the extracurriculars and everything in school. And that was a part of learning how to express yourself. So I was an Indian classical dancer. I used to do debate. And those were all ways in which to figure out your own voice. And that's what I think brought me to this library, which was there by UCFI, which is the United States Educational Foundation of India. And there was a librarian there who was wonderful. And she's the first one who actually told me that you could apply to colleges in the US. I had never heard of that. At that time, you could get these brochures, and these campuses were beautiful, and everybody was laughing and chatting and sitting under trees, and there was bright sunshine and really doing everything but studying. So it looked great. And so I started thinking, how do I get there? The exams and things was one path. But when you apply to these colleges, you also have a hefty application fee, which I didn't have money for. So I would write to all these colleges and say, I don't have the application fee, but I'm amazing. So you should read my application anyway.
Really?
And I'm grateful that they didn't throw it away. And some of them actually read it. I focused on applying to women's colleges because I thought the chances of my parents letting me go was higher. I was extremely fortunate to not only get admission, but get a scholarship to go to Smith College. Which is where I went. And I'd say that was probably the first big turning point, is kind of making that decision to go to college outside India, figuring it out, and economically being able to do it because of a scholarship, and then going to my parents and saying, this is something I really want to do. And I'm also very, I think, both grateful as well as admire the courage my parents had in letting me do that. Because I wouldn't describe what I did as courageous, because I actually didn't know what was the risk I was taking or anything like that. But I think my parents knew what it meant, and that was really courageous of them to allow me to follow my own path.
So a few years after college, you decided to enter the banking industry, which was a male bastion, so to say. How did you ensure that you were heard? You were a woman of color. So how did you work around these two odds at that point?
So I'd say being in a women's college was actually very helpful for me. That was a safe space where I could speak up without being censored, speak up without having in my head, oh, what will somebody else think of me? And that was extremely useful in life, in classes, while running for student government, while running for leadership positions. There was never a question about, can I do that because I'm a woman? Because everybody around you was a woman. All the positions were held by women. That was a very useful way to learn about the possibilities of what you could be, as well as finding my own voice. And so then when I started in banking, you're right, I think a lot of people oftentimes didn't speak up. And again, I spoke up not from courage, but from ignorance, because I didn't have any prior knowledge of how the banking industry worked. I didn't have exposure to it. So I didn't appreciate that, there was in people's mind a little bit of hierarchy at that time. It didn't occur to me that I shouldn't say something, or I should wait for my turn, or I should wait to be asked. When there was an assignment to be done, I didn't start with, how was it done before? So even today, a central belief of mine is that if you always go back to how was it done before, you will be limited in your creativity and your possibilities. A lot of people think that this job is extremely mathematical. I jokingly say the math we do is kind of addition, multiplication, subtraction, and we use Excel to do it. And growing up, I did a lot more math in my head, and the job I do doesn't require calculus. So the analytical part of it came easier to me.
Mm-hmm.
What I found harder was all the other, I don't know what you call them.
The soft skills?
The packaging of it is, how do you present it?
Mm-hmm.
How do you speak in an American context? How do you put yourself together? Those were the harder parts to learn, rather than the content of the job itself.
Tell us a bit about the progression in your career.
One was when I kind of moved from being, the titles are kind of analyst and then associate, and then you become a vice president, and then a director, and then a managing director. So that's kind of the progression of titles. And so when I went from being a more junior person to, for the first time, becoming a vice president, that to me was kind of a first transition, because till then somebody would give me work to do. And then it was having to figure out how you get work, how you network, and how you figure out projects and deals to be on. How do you market? How do you find commonalities of topics and subjects to relate to people in a non-transactional context, when my own cultural upbringing didn't involve watching any American sports. And American sports are a big part of the culture here. And so that, I'd say, was probably the first transition to try to figure out, do I want to go in the direction of, spending time learning about American sports, because that was some of the advice I got, or do I try other ways in which to connect to people? Because finally, there is more commonality among human beings across the world than differences, is my belief. And so how do you find those and find points of connection? How do you find a way to speak where, as you probably can tell, I still have some mishmash of all accents, be comfortable with that there may be some words that I pronounce which is different from how person who's grown up in the US may pronounce it, but getting comfortable with that's all right. People can still understand what I'm saying, and that's good enough.
Yes.
And the content, I'd say, is more important than, focusing on exactly the way I say it. So I moved away from trying to change myself to fit an American mold, to figuring out a way to be myself, but within the context of the work I do. The years I had as a VP and director was probably the time period when I figured that out for myself. And I had a lot of help, a lot of mentors, both internally at JP Morgan, at other firms. Many of my clients ended up becoming my mentors and giving me advice.
What are some different leadership lessons that you have learned over the years as a banker?
And the second kind of phase, I'd say, was when I first became a manager, which was in 2015 when I started running the US M&A team. I suddenly went from being only an individual kind of producer and being responsible for your work and your deals to now being responsible for a franchise and managing a lot of people. At that time, about 50% of the people were people I had worked for at some point of time. And I think when I first became a manager, all my direct reports were men.
Wow.
That was a turning point as well for me to figure out my own style in terms of how I want to be a manager. What does leadership mean to me? What does management mean to me? How do I want to work with each of the individuals? And my ethos has become that everybody has their own style. And as opposed to having one version of this is what success looks like, or this is what you need to be in order to be successful, which is a little bit of how, a lot of the coaching and mentoring that I got when I was growing up. And my own ethos is a bit different. And as opposed to trying to change them, is make them become and help them become the best version of themselves. And that was something that I evolved in my own thinking, watching other people, reading a lot of books about leadership and management, and also just trying different things. Because I would ask people, what can I do as a manager to make your professional life better? And listening to what it is that people were saying and what they wanted. And sometimes somebody said, the best thing you can do is stay out of my hair. And if that's what they needed at that point of time, then great. And sometimes there would be specific asks. And if I could do it, I would do it.
How do you think you approached many of the crises that we saw in recent years? Take the pandemic, for instance, once in a lifetime crisis. How do you think you as a leader responded to the asks and rose up to meet the challenges?
I started running the global business in February of 2020, literally 1 month before everything shut down in March of 2020. The first kind of 3 months was very, very scary, anxious, difficult, because you just don't know. There was no book I could read. There was podcast I could listen to about how to navigate that. You just had to figure it out and figure it out with other people who were in similar situations. So that is one thing I did. I spoke to many CEOs who were running their own business and asking them, what are you doing? Other people in my jobs at other firms, peers of mine in this organization, just trying to see what is working, what is not. Because especially in this business, which is a client service business, which is about being with your client and understanding them, being with boards, being with the counterparty. This is a very high touch business. And then you say everybody is in their house. You don't see anyone. No physical interaction. You don't get on planes. You don't go anywhere. I thought this business was going to come to a complete standstill. And of course, if I'm anxious and I'm nervous, then everyone in my team is anxious and nervous. And that was a very important learning, that people were not just expecting me to have answers. They were expecting me to be available, empathetic, vulnerable, not pretend that I had an answer, but kind of admit that, look, I'm trying to figure this out too. Let's try and figure this out together. That was a big learning for me to navigate those 3 months. And then, Neha, this is the unbelievable thing, is that after that, the next 18 months, from July of 2020 to December of 2021, was the best time period in my professional career in our business.
Low interest rates,
and
cheap debt, and very highly priced equity. So that, of course, helped deal makers across the globe.
A lot of things I think helped. Certainly the currency, which you mentioned, right? Both the availability of debt as well as the ability to use your stock as currency, I think helped. just like human beings had to figure this out, companies had to figure it out. So your supply chain was affected.
Yes.
Suddenly you needed tech capabilities that you thought you had years to figure out. You had to become digital overnight. There was no time to test. So people would normally maybe say, oh, we're going to roll this out. We're going to try it out in one location, and then we'll roll it out in one country. And instead they were like, okay, we're going to put this in. 2 weeks later, we're going to go global everywhere, every location. So the speed of digitization increased dramatically, and the need for supply chain solutions and tech capabilities was just immediate. And there was no time to build. So when you ask the traditional question, should you buy versus build, it went dramatically in the direction of we should just buy these capabilities and get them so that we can actually continue our business. So there was a lot of drivers for why so much activity happened in the banking world during those 18 and then I also jokingly say that when you put all bankers and lawyers and clients stuck in their houses and they can't take any vacation and their hobbies, guess what? They all do deals.
But interestingly, Anu, after those 18 months, 2023 presented quite a dry run, didn't it? Once the interest rate cycle started turning, 23 was a dry year for deal makers. How did you use your experience to make the most of it?
No, you're absolutely right, Neha. There were a few different things that happened. There was a bit of pull forward that happened, meaning deals that would normally have happened over 3 years happened, over 18 months or 2-year time period. So there's a little bit of that happened. And then you did have, interest rates have a fairly dramatic increase in a short period of time. If you look at the interest rate itself per se, it's not that high, but the change and the rate of increase was higher than a lot of people were prepared for or expected. And as a corollary, the equity valuations came down. It's just human nature that if your stock was 100 and now it's at 50, you don't feel so good about life and you don't feel that excited about deal making. We also very unfortunately have 2 land wars going on in the world. So in addition to the crisis in Ukraine, there's also the crisis in the Middle East, the increased geopolitical risk, and its impact on macroeconomic policy across the world, but particularly in the US and Europe. I think that affects a lot of the thinking and confidence in boardrooms and with CEOs, which also influences deal making. But you asked the question the exact right way, is how were you able to use your experience to navigate 23? Because I think that was the big difference.
Yes.
Because if you had not worked through cycles, and if you started in this business, let's say in 2010, you only saw one market, a market that just kept going up year after year after year.
Yeah.
Whereas, good or bad, I did have the experience of seeing the dot-com bubble burst in 99, 2000. The global financial crisis in 2008, 9, 10, and having seen those cycles and how people navigated it, some people navigated it well, some people didn't navigate it well, and being able to bring the learnings from those to 23, I think was pretty useful. And then also as a firm, JP Morgan Chase today is the result of multiple mergers and acquisitions deals. And as a young person in this business, as a junior person in this business, I saw what living through these deals means. How does integration work? How does cultural integration and challenges work? And I'd say that was also very valuable insight that I could bring to bear in 23, because we did have a lot of people in my team, at our clients, who have never seen a downturn or even softness. And so being able to say, look, we've seen this before. This is not as hard or as bad as some of the things that we saw during the global financial crisis. We can get through it. Here are some of the strategies, ways to think about it. Here are ways to creatively think about deal doing while also mitigating risk. And that was, I'd say, very valuable and allowed us as a firm and as a franchise to get more deals done in 2023 than any other.
Do you think that deal making will bounce back, or do you think it will still take maybe another 10, 12 months to reach the levels of maybe 3, 4 years back?
I'd say I expect 24 to be better than 23. And the reason I say that is if you look at even month over month in 23, the second quarter was better than the first quarter, third quarter was better than the second quarter, and the fourth quarter, and particularly December, was very good. And likewise, January has been a very good month too. And there is a little bit of feeling in the market, and the market is trading on the basis of the fact that the likelihood of interest rates going up is not. In fact, there is an expectation that there will be multiple interest rate cuts this year. Different people have different views. Some people say 3, some people say 4, but everyone is forecasting interest this year. The second is the valuation levels have seasoned a little bit. So the example I was giving you earlier, that in 22, you were like, oh, my stock in 21 was here, whereas now you're in 24. So you're looking at where was my stock in 23 and 22 and comparing that to today. So there is a bit more of an acceptance and realization of the new reality that companies are facing and their current earning profile, as well as whatever inflation is going to be and how much of that you're going to be able to pass on to your customers versus how much are you going to have to bear, and accordingly, what is going to be the impact on margins and profitability. So companies have a better handle on the external environment as well as their own internal forecasts and projections. What is a big variable is the wars that we continue to be in the middle of, geopolitical risk, elections happening in more than 50% of the world's population. And so those are all changes and risks that one needs to navigate. So when you think about are all conditions ideal for deal making, I'd say it's mixed. There are some things which are helpful and will drive deal activity, and there are some things which will bring caution and inhibit deal activity. But when you sum all of it up, I still expect 24 to be better than 23. And once you have some of these elections sorted out and hopefully resolution to both of the conflicts that you have, then 25 should be a better year than 24 also.
How much dry powder do you think global investors have at this point to invest once many of these factors kind of settle in and some of the uncertainty is addressed?
That's a really good observation. Is private equity is currently sitting on $2.5 trillion of dry powder. That's a huge number. Huge number to even wrap your head around, right? In 23, especially private equity is largely on the sidelines. Not every firm, but a lot of as a whole, as a group, with decade low levels of deployment and decade low levels of monetization. So not all of that will come in this year, but over the next 2-3 years, people can't just sit on that amount of dry powder, as well as a lot of the assets that are ready for monetization will have to find some path to either partial or complete monetization. So I expect over the next 3 years, private equity activity to be much higher than what it was last year. I don't know whether it'll be as high as it was in 21, because that part of the market is very linked to and influenced by the interest rate environment, but the amount of capital that is there to be deployed and attractive investment opportunities where the sellers are more accepting of today's reality, the combination of the two may result in allowing people to bridge the valuation gap and get deals done.
How much of it do you think could flow into a country like India, which is the fastest growing economy in the world at this point?
I mean, every firm will allocate capital a little bit differently. But even if 10% of that goes to India, you're talking about pretty huge numbers. And it's not just about how much capital can flow. I think it's more about having investment opportunities as well. Is how liquid is the market in India, the public market, And then you also have a huge private market in India, right? So you have both categories, several family-owned businesses, multiple generations of families running it, and that may just continue to stay that way, right? Going from one generation to the other, as well as you have now several founder-owned businesses, which I think is so exciting for the Indian market. In fact, when we had our last conference there in September last year, we got together several of these founders who have, it's not their parents' company or anything like that. They have themselves founded it, built it, and many of them, are all working towards getting to that unicorn status of being valued at $1 billion or more, either in the public or private markets. And the number of individuals who are starting their own companies, the capital that is available to support them and their growth, and the market that is available to enable many of these reach unicorn status and find the monetization. I think that's very exciting for the Indian market. So India is a part of the world that we are very optimistic about. So as we look at various areas of growth globally, and even within Asia Pacific, the Indian market is one that we as a firm are very optimistic about and have invested a lot in. In fact, when you look at the number of people who work at JP Morgan Chase outside of the US, we have the maximum number of employees in India. I think it's about 60,000 people that we have in India, and it's a market that we are very committed to and believe in the growth of that market. You also see, I just talked about private equity. It's a lot of private equity capital that is flowing into India. Japan and Korea and India, these three markets we see it being a lot more active. And I think about different large private equity firms now have their Asia office that is headquartered in India.
My last question, Anu, with all the uncertainty around us, which has opened doors to opportunities as well, how would you look at global growth and what prospects do you see in the coming year, despite the wars that we are seeing and, of course, inflation, which is a bit of a bother still?
So I think, look, uncertain markets like this give, as you say, a lot of opportunity, but being able to take advantage of that opportunity requires more preparation, more diligence, more structuring, and more nuanced deal making, because you have to just be that much more careful. Because just like there's a lot of opportunity, there is risk as well. And so how do you structure the deals in a way that you are taking advantage of the opportunities, but also mitigating risk? So being prepared and knowing which are the targets that you want to chase, or the timing in the market where you're fully ready, and when windows open and close, you can take advantage of the window being open. Preparation, diligence, structuring, more nuanced deal making.
Anu, thank you so much for joining us on Pathbreakers and sharing your views on a whole range of topics, also inspiring young women to consider a career in banking. Thank you very much for your time.
I really enjoyed talking to you, Neha. Thanks for having me.